You know what's crazy? Most traders blow their account not because they have a good strategy, but because they miss one crucial signal that can change everything. This month, I made just a little over $6,000 spotting new potential lows and new potential highs before they even happen. Today, I'm breaking exactly how I did it and exactly how you can leverage this same concept to make profits, know when it's too late to get in the trade, know when it's too early to get in the trade, and overall how to get in sniper entries. And this is the one tactic that can be your $10,000 a month scalping edge. Let's get to it. So let's get into my tech stack that I use when I'm trading. The first thing is board funded. The reason why I decided to go with this prop firm is simply because they have a trading journal integrated, which allows you to track your strategies. You will know what percentage is what. You will also be able to see what best pairs are tradable for that asset or for that strategy, as well as know what's the best days, the best times, and so forth. And it's really good to have everything tracked. And one of the big reasons is because this is the exact same trading journal that I still follow as of today to take all of my trades effectively. So this is why we're going to be using board funded to track all of these and also take some of our trades. TradingView is where we're going to do all of our markups and marking up the charts just because it's super user friendly for the users if you're a new trader or an experienced trader. Last one is optional, but this is going to be the FXAN indicator. For those that's looking for an extra confirmation, this indicator is what you also can use as well. All of these are down below if you need access to these tools. Now I want to get into PNL and PNH, exactly what it is. So a PNL is a potential new low, as well as a PNH is a potential new high. All it really means is the highest point of the market or the lowest point of the market within that range. If you look at a high or you look at a low, that is exactly what a potential new low is. Now, the thing that most traders don't understand is you can actually use these market structure highs, market structure lows to catch potential reversals in the market. And this is kind of the reason why I use it a lot. What are potential new highs and potential new low zones? Potential new high is a level where price can either reverse or continue bullish after forming a new high. Potential new low is a level where price can either reverse or continue bearish after forming a new low. And then these zones act as liquidity traps where smart money enters or exit positions. Basic concept, you can spot out late entries. That's the biggest thing I use it for. So meaning if I was to take a buy position and I'm curious to say, I don't know if right now is the time to buy it, and the market is here, I can use this leverage to help me know if this is a late entry or an early entry. And then the other thing is spot out potential reversal zones. Once again, let's say you're in a market and you're like, oh, I trade supply and demand, but I don't know if this is going to be the valid supply level or the valid demand level. When do I expect a reversal? With this whole concept, you will be able to identify the valid level and know exactly what reversal is actual valid than the others. Also, the last thing is get sniper entries. My favorite is I use this mainly for sniper entries because it gives me more of a reward and less risk. And the ultimate goal here is to accumulate your account and grow your small account, especially if that's what you're doing, because that's what we talk about mainly on my YouTube channel as well. And also when we go live, you guys know I'm doing $100 to really $100,000, and I'm doing this all live. So if you haven't seen any of these videos, you got to subscribe because that's where we're doing it on this YouTube channel, all for free. And you guys get the full experience. That's the reason why I like this concept a lot, because it helps me understand my entries. It helps me know when the potential reversal is happening. And it also can spot out late entries for those that's coming in the market and they're like, I see it's going up, but is it too late? I have this happen to me all the time. So just having that idea in your mind kind of gives you a full glimpse of understanding this is not the time to get into the market. Now, if you guys pay close attention here, this is a prime example of a potential reversal. And if you guys get this whole method right, you will know this is not the time to enter in the market. Let's say you're coming in the market now during the end of New York session or the end of London session, or you're kind of still confused if this is still going to go up. The moment something clicked in your mind and it said, I want to enter in the market, and the market is literally right here, and you just know it's already going up, but you're asking yourself also, well, wait, I don't want to get in too late. Knowing that this is the potential new low zone, it makes it more accurate for you to say, this is not the time for me to take this trade. I am going to wait on it to actually hit this and wait for me to see if it's either going to reverse down or if it's going to continue up. Then I can look for a possible entry. And this is exactly why I love this method so much. How I trade this method is using candlesticks, and that is about it, as well as the Fibonacci. These are the two metrics to making this work. First thing is you need to know what is your range. And I say this a lot. The range is your A point and the B point. You need 2 points in order to equal a range. Without that, you don't have a range. Now, the problem is, how do you map out the A point and the B point? How do you know when the A point is and when the B point is? First initial process that you have to pay attention to is, if we look in the market and we're like, I see that we created what we call in high and we created what we call in low. If the market is already establishing a high uptrend, you must wait on it to break the low. Once market breaks the low, that now identifies this as an A point, because this is the highest point before it broke structure, and that identifies the beginning of your range. Now, how do you map out a B point? The misconception that traders have is they think this may be the B point because they see one candle go up and then they're like, oh wait, no, it's still going down. Or they see another candle go up and they're like, oh wait, it's still going down. All you need to identify is the most recent highs within the following range. So if we're looking here and we see that this right here is our high as it is, this right here is our high as it is, and this right here is our high, all we're doing is waiting on a very beautiful engulfing candle known as a displacement. It has to create a swing point change, which is known as SPC. So what this essentially means is it just breaks aggressively past the most recent high, which creates that displacement, which gives it a sign of weakness in the market for that high, and also gives it a sign that this could be a reversal. We need that in order to know that this now becomes our B point. Basically identifies this is now the newest low of that most recent range before it broke our most recent high, which is right here. Once we identify this part, this is now where we want to create our Fibonacci and draw our Fibonacci from that A extended all the way down to the B point. Now looking at this here, you see that market created our range, which was here. And once we identify the range, we had the idea of now knowing where our potential new low is. And the reason being to that is because our fibs that we're going to be using has an extension setting. And this extension setting is coming from the Fibonacci sequence expansion tool. So with this expansion tool, which is the -.27, and then the other level would be the -.618. In between these two levels will be the potential new high or the potential new low. And once we identify that, now we have an idea of where market could create the next high or create the next low. So we want to avoid as much as we can. And this goes right back to what I was saying earlier when I had told you guys that looking for these setups based off of this simple concept will change your trading strategy in so many ways, because you can spot out late entries. Once again, now you understand why I said you can spot out late entries, because if your potential new low is at, let's say, $100 and the market is already at $98, you know not to get in for that buy or for that sell, because the potential new low is in that area. Or also another beautiful way is you can spot out potential reversals. So let's say you are in a current floating buy or current floating trade, and the only way you want to get out this trade is when you see the reversal. You can use the potential new highs or the potential new lows to capture that. And another beautiful thing is get sniper entries. If you're in that potential new high or that potential new low zone, you are now able to use that area and use that in your favor to take the trade that you want to take, because now you're in the best position that you can be. So now if you guys look closely right here, the potential new low worked very beautifully on gold, where we mapped out our highs, which is here. This is the A point, because we broke past this low aggressively with a huge displacement, also known as a swing point change. And we also seen that we had a high here, a high here, high here. And the most recent high was also here. We noticed this was a shift in the market, also known as a swing point change. And this is where market also had created that displacement, and it created what we call now our B point, which is the lowest point before it breaks the structure. And that is right here. So now we can map out our Fibonacci from A to B And then within that negative 27 that I've told you, and then that negative 618, you can use this level to figure out your potential new low and take either your take profit could be in somewhere here, or if you're looking for limit orders, you can also do essentially limit order here. And then if you're looking for market execution, you can wait for some of the confirmations inside of this PNL and then look for that buy setup that you're looking for. And then from there, it's pretty much rest is history, because there's so much other info or ways you can scale your account with a couple risk management strategies that I do talk about in this channel. So you guys see that this is the concept. I do want to show you all of these in the live market so you can understand it. Now, if you don't know the settings, once again, this is the settings I have. I pretty much just have everything else out the market because, or when it comes to the Fibonacci, because I don't use the Fibonacci for anything else but just this potential new high and potential new low concept. And within that, you can copy this video, pause it if you have to, and we'll go from there. So let's talk about that setup that you guys seen earlier. You need to map out the levels, and this is the most important part when it comes to this strategy. If we're looking at market before we determine the reversal or anything like that, we need to know our levels and our highs and our lows. Seeing here, market already created a low, and also seeing here, technically market also created a low. We technically broke through this low first, which if you look at this low being broke through first, what is the last high before market broke through? That will essentially be this mark here, which is our A point. So we're going to go ahead and use this as our beginning starting point for this range that we hopefully can build out. Now, after that happens, I'm just going to draw lines out here and then wait on market to break one of these levels. So the moment it does, which is right about here, known as that displacement SPC, right? Swing point change. We had that happen right here. I am going to mark this as the B point because this is the lowest point before it broke through the actual swing. And since we now identified the A and the B, my favorite part is now drawing out the Fibonacci. So the cool thing about the Fibonacci is it doesn't really matter how perfect you draw it, just draw it where you see most other wicks hit, but it's always going to be spot on because you're using 2 points to map out your potential new lows and your potential new high zones. So if I'm already going here and I'm mapping this out simply like that, you see that now my red levels are once again my negative 27, my negative dot 27, and then my negative dot 618 levels. So all I'm going to do is just draw the box, draw my box right there. And then the cool thing about this is let's just take a trade. We're going to say we're going to take an entry once we see maybe a nice setup. We can do this a couple ways. We can take a sell position because we have an idea that this is our potential new low, or we can wait for market to tap into here and then look for that buy because on a higher scale, the market is going all the way up. So you do got to be careful about the higher time frames when you're doing this as well. So it's not, doesn't create any confusion. So what we're going to do is, let's say we're taking a sell position, and if we hit sell, we can go ahead and add our stop loss to where we had it there and our TP to right about here. And we go ahead and just sell the market and let's see what happens. Hit play. And then as you see, the market tapped that area very beautifully. So the cool concept is, doesn't matter how you're trying to trade this, just use these potential new highs or the potential new lows to know your entries, to know your exit points, and to know if you're in the trade too late. Because if we were already here, I'm like, damn, we're going down. We just broke the structure. And I know a lot of traders see this as a break of structure. They're like, I'm already going to sell the market. Depending on how you're trading this, if you're holding it for a long position as a sell, you might be a-okay because your stop loss may be above some major high. But if you're scalping it like me, this ain't gonna make sense because you're like, yeah, I'm gonna take my stop loss here and then maybe my entry here and TP here. You see the risk is horrible for one, but the main thing is you're just in the late trade and the potential high and the potential low is gonna happen soon. So it just makes sense to wait for that setup because you can get in a better entry known as a sniper entry with a low risk, a high reward. Now, let me show you guys this in a more technical way because this can happen where sometimes you get a spike and then another spike and you're not sure how to draw out your levels to know if this is the breaker structure or not. So first and foremost, we're looking at this here. This is the picture that we're focusing on. Let me go ahead and close that out. The thing I want to do is start mapping out my levels. So I'm just going to draw my lines out, So I see we got one here. Also, I'm going to draw my lines out here. And I'm only drawing out the highs, not the lows. Map out levels here, map out levels here. So now the first initial thing that popped up is already we broke this with a nice displacement, also known as a swing point change. We had that happen right here. So we now see that the market is shifting and changing this direction because of the aggressive sweep after it broke this high, which now identifies the lowest point is now going to be my A point. The first point is always going to be the A point. The last point is always going to be the B point. Here's where it gets a little tricky because there's two parts to this, and I want to show you guys the two parts. This all depends on how you're looking at this on a higher scale or the lower scale. But we're paying attention on a 15-minute time frame, and I'm going to show you guys how you can effectively take this two different ways. So we're going to go ahead and map out our lows. So we're going to draw it out like this, draw it out like this, draw it out like this, and then draw it out like that. Where have you seen a low had hit? You clearly seen this was it right here. So this basically broke through with a beautiful candle. Once again, another shift in the market. And since that had occurred, we know this isn't the biggest shift in the market because of the volume of the candle is very small, meaning that it's not as big as these candles were. And this could be due to the session, the time, and the news and such and such. But the reality here is, regardless, we still had what we call a shift in the market. Depending on what time frame you're looking on this, 1 minute, it would have definitely looked like a shift in the market, also known as a swing point change. So you got to keep that in mind. So now this identifies the B part. If you guys were to take this and still look at this on a 15-minute, you're just drawing your fills from A to B. So from this wick to this wick. And I'm still going to map out my PNL level. And then right here, we're going to say PNH actually, because this is our new high. I'm going to remove the fibs to show cleanness. As you guys see, clearly market still tapped in that area spot on, and then it went the other direction. Now, if you want to start looking at this on a higher analysis, so now I am going to actually go back. I don't know what happened. All right, there we go. So if we go back, you guys will pay close attention to something I like to call diagonal structure. One thing that happens a lot with a lot of these volatile markets known as gold or US 30 or really NASDAQ, you want to also pay attention to diagonal structure. So diagonal structure is where you see the market going up in a sideways trend like this. That is another indication you guys can use to identify breakout structure. I use it all the time. So if we were to map out the higher scale, so we're going to go on a 30-minute time frame, and we're going to go ahead and start mapping this out on a higher scale. So now I'm looking at this in a diagonal way. So now I see we have one here. We broke through that. Beautiful, right? So now if we look at this play, we see that we have a very beautiful, strong candle that broke through, which is known as a shift in the market again. This is the swing point change. We can mark this as our B point and this also as our A point. Draw out the fibs again from here to here. You guys still see that same analysis happen. This is the beauty of why I like going with this strategy and this concept. So that same thing still applied, it just happened a little later, but it happened here. Now, if we go closer and we look at this, we're like, well, shoot, where is our most recent low? On a 30-minute time frame, the most recent low that you can really see is technically here. If this never broke through, then this is never going to be a range. In reality, there might be a bigger range that might happen. So you have to know what time frame you're focusing on. Do not go on a 30-minute, a 1 hour, and a 5-minute, and a 2-minute, and 30 seconds and try to do this unless you have the skill set to do this. If you guys don't understand this, comment down below. I need more videos like this because I will drop more videos like this to break this down in more detail. But regardless, guys, I'm making sure I'm giving you as much gems as I can. The reason why you want to journal everything is you want to know what is what and when is when. Notice that these are the trades I showed you that I took off of this method, and it made about $4,000 off of these two trades. And then on my personal account, I took a Bitcoin trade that made about $3,000 essentially off of that. But if you look closely, you will see that we have different strategies that I implemented into the trading journal. And these strategies are part of my 3-man standing strategy, but more so of my PNH, PNL. But we're going to add them to my 3-man standing strategy because it falls in the same parent. Now we're going to add both of them. Now my strategy has been added. Now I can go to trading journal, and then from here, I can see all of my different strategies, and I can know what strategy is more profitable than the other. And the beauty of this is I can also focus on just one particular strategy instead of saying, oh, I got 5 strategies. No, I have 5 strategies, but I have one that is actually most profitable. And when I click that strategy, I now know exactly what asset is more profitable and what asset isn't. Clearly, you see I have a 100% win rate on US 30, and Mondays is the best days to trade this. I took a total of 24 trades, which gives me the overall bias on that. Also see that NASDAQ and US oil is part of this as well. I also can tell my biggest win, my overall loss rate, so I can kind of know more in depth about this strategy, which helps me analyze it. So when that time comes for me to create a trading journal, I can now go into my AI assistant, and then within my AI assistant, I can literally tell it to analyze my trading account, analyze my strategy, or help me understand more about my trading account. So having the plan and having everything understand, from the strategy to the overall trades you're taking to how to take it, that is what creating a trading plan looks like. Now, if you guys personally want this one, just go ahead, check out the link down below. I do have access for you guys to get this for free, of course, and you can use this as your guideline to maybe use TradingView, or if you use any other trading platform to do your journaling, maybe your own through Notion, or maybe you're using TradeZilla or something like Board Funded, you can absolutely do that. However, I just like how it's integrated in the platform, so I don't have to go into third party and pay extra. It's already integrated here for me to use. Now, that being said, seeing what you guys see and understanding that this is kind of what I say, there's the groundbreaking to finding the right setups and getting started to start making profits, comment down below and let me know that you do like this video and you do want more like this, and I will definitely do what I can to drop more videos for you guys. Subscribe to my YouTube channel, like my video, and also tap into Trade with Solo if you guys want to get more exclusive access to a lot of the things that we're doing in our community. Other than that, your boy Solo, I appreciate y'all checking out. Peace.